program. My guest is with me right now. She's Dr. Ladi Bala Keffi, MNI. She is the acting director of the Monetary Policy Department at the Central Bank of Nigeria. That department is very integral in putting together, a lot of research, a lot of data for the Monetary Policy Committee. So good morning, Doctor, and welcome again. I always see once in 2 months, that we always have this discussion.
Yes.
So thank you for coming. Good morning. Where should I start from now? What has been the reaction since since yesterday?
Well, it's been mixed. The reactions have been mixed. It depends on where you're looking at. However, what I would say is that it was an absolutely vital decision that the committee had to take, because the fear of getting to hyperinflation is looming. And when this new management took over, they were consistent in their messaging that they were going to be focused on price stability, which is their primary mandate. And the data that we have in the bank, what we see, other people do not see what we see. We have this huge database.
What are you people seeing that we're not seeing? Because, I was listening to an analysis yesterday, even before the MPC, I talked to a lot of analysts, like, okay, whether the central bank has some details, we don't know. Is it not the same details that we also have from the NBS, from you people, when I mean you people, CBN also gives us data.
Yeah.
I read your monetary, what do you call it, monetary credit, financial,
guidelines.
FX. Yes, exactly. So, what more are you guys seeing that we are not seeing? I can't see now with my glasses I'm wearing.
So you see, seeing the data and analyzing the data are two different things.
Okay.
So we gather all the data. We gather data from the real sector. We gather data from the financial sector. We gather data from the monetary sector. So all of them, external sector, we have all this data. We piece them together to give us a picture and a direction. So what you see in isolation. So we see a broader picture in terms of data. And we don't stop at just looking at data. We go take a step further. We analyze them in depth, because we have a plethora of economists that are experts in different sectors, on different sectors of the economy. And we put these together to enable us take informed decisions.
So now, distill for me why those decisions were taken, because a lot of people, though I did not, I wouldn't say, okay, because I even said it on the show on Monday. I was not part of the pack that said that you guys will hold.
Yeah.
I did mention, of course, it's either going to be a pause or it's going to be a more hike. But I think I was leaning more to the even hike. You know why? That was for me, my own analysis, because Cardoso had maintained that orthodox monetary policy,
yes,
and that the 2 months, from my own analysis, the 2 months of disinflation that we've seen could actually be attributed to perhaps food harvest and all of that. So it's not really totally monetary policy induced. That was my own assessment. So when he announced it yesterday, I wasn't part of the pack that was surprised. But I also understand where, I wouldn't say I understand with governor. I wouldn't organize.
Please understand.
I don't want to understand with him as I did yesterday. And why is because it will really have impact on a lot of small businesses, borrowing costs, debt burden, people non-performing loans and all of that, which that's also why you are here, to be able to explain that.
Yes.
So speak to our viewers as to why that drastic 50 basis points hike.
It's not drastic, considering that you
Okay,
expected
considering
even
from
more.
where people were coming from.
Yes.
There was a time you guys did 150.
Yes, it's moderate.
Okay.
And, okay, so we did some scenario analysis, the counterfactual. If we had not done what the MPC did yesterday, inflation would have gotten up to 38% by December.
Oh, really?
So we did some scenario analysis to see if we had not tightened, because money supply has increased despite our tightening. So let me take you back. if you look at history, the ways and means, the excess liquidity that had been in the system before President Tinubu took over was massive. It was unprecedented in the history of Nigeria, that kind of excess liquidity through ways and means. And these ways and means was not backed with any printing of money. That's what ways and means basically is. Was not backed with any fundamentals, macroeconomic fundamentals, was not backed with any collateral. Central banks, you don't just print money like that. There must be a backup. Assets, there was none. We just printed. So when the president took over, the economy of the country was in a mess, which meant that when Governor Cardoso took over, he inherited a huge burden of excess liquidity in the system, a serious decline in the reserves position of the bank. Inflation was ticking upwards. So from then on, they had to take drastic measures. And that is why you see we've been hiking. Because the fear of getting to a level of hyperinflation, which you know what happened in Venezuela. So in order for us not to get there, because we do not produce anything that will give us foreign exchange in Nigeria, largely. We know non-oil sector has been picking up, but it is not enough considering the quantum and the value of the economy. So basically what we expect is our income from the oil sector, which hasn't been forthcoming. So you see, we inherited a double-edged
And even
barrel.
going to be worsened as a result of what's happening between NNPC and what the president said in terms of, because you're supposed to be getting inflows.
We're supposed to be getting inflows.
Which you're
so
not getting.
we have to give kudos to the current management. From the time they took over from last year, September 2023 to date, the reserves has increased. From when they took over, reserves was 28 billion or so. As at September 19th, 2024, reserves was over 39 billion. And from I think February to date, we've gotten about $7 billion in terms of inflows. Month on month, we've been getting inflows of like $600 million or more. And this is largely due to, I'll tell you quickly, Nancy, two things. One thing that I want the audience to know is that there's now new confidence in the central bank's management team and the Monetary Policy Committee team, MTC members. There's renewed confidence and trust in the way that the management of the bank, they've been handling issues, institutional reforms, and their commitment to price stability. So based on these factors, we've been getting inflows. And for us to get these inflows, the governor has had to go to actually hold investors forum, talk to Nigerians in the diaspora. I'm sure you saw his last meeting at the IMF spring meeting. He held consultations with different sectors of the US investors. In fact, they came to Nigeria, and our messaging has been the same. He cleared the backlog of FX that were owed to investors. So all this has built tremendous trust, and that's why you've been seeing these inflows. IMTOs were registered. We have had increase in remittances, inward remittances, because we are talking to Nigerians in the diaspora that bring your money and you will get good return for value. And the system now has changed. Trust us, have confidence in us, and that's what this management has been doing.
Do you think the Nigerians have this trust, this level of trust? Because it's one thing to have foreign trust. It's another thing for the locals to be able to trust. Why? Because like I mentioned to the governor yesterday, I told him clear. I wasn't missing my words when I asked him. I didn't miss my words when I asked him the question. And I told him that Nigerians are suffering because what I've been listening, a lot of people even spoke to me yesterday, that 27.25% now, a hike would really impact even businesses. you yourself know it will impact the real sector.
Yeah.
Borrowing cost will increase, the debt bottling. People will start getting mails now from their banks that
to reprice their loans.
to reprice their loans and all of that. So how are you also juxtaposing that? Bearing in mind that what you've actually also adjusted, this MPR you've adjusted upwards, will have also a slight impact on GDP growth, as it were. I think the last time I spoke with you, or perhaps it was Dr. Mahmood, when I spoke with him, he said then, when he was a director of monetary policy, that for every, no, it's Dr. Tumala, for every,
I'll give you the figures.
yes, for every rate hike that you guys do, you have different scenarios that you've planned in terms of the shave off it will have on GDP. So there would be an impact, you know. So how are you people balancing this thing? And that was why I asked Yami Cardoso yesterday that you may be having foreign say, oh, hoopa pray, go, but your people are not cheering you on.
You know, an increase in if you have Nigeria's economy, we're a mono product economy. We are largely dependent on imports, whether we like it or not. Our capacity utilization is low. Our manufacturing capacity is low. So, and that is not within the purview of the Central Bank of Nigeria. We are enablers. There are structural deficiencies in the economy which must be handled by different sectors of the economy. We have the Ministry of Trade and Industry. We have the Ministry of Finance. We have all these agencies. So what we need is collaboration, which we are working towards. As I said at the last time I came, and we're serious on that. We've been holding several meetings to see how we can dialogue.
Are those meetings yielding fruits?
Yes, they are. And I'll tell you, you mentioned the GDP now. So let me tell you, from the last MPC to date, pre-MPC GDP was 2.98%, and it grew to 3.19%. You can confirm that. So GDP is improving. Yes, hike rate will affect some businesses, but we've done some surveys. We are now more transparent as we are transiting to inflation targeting to enable us manage this inflation. We are now more transparent. We're publishing data on our website. We are doing surveys, conducting surveys, and we've even gone down to the market, small businesses, and you'll be surprised. The result we showed for firms showed that they are optimistic that the path we are taking is a good path and that their businesses will work in the medium to long term. They understand that we cannot, it's not magic from what we saw, the mess that was inherited, to correct the mess and then refocus the economy to start generating the output and productivity that we need will take time. We can't do it in one day. As the common saying goes, Rome was not built in a day. The survey also showed that households were pessimistic. And you'll understand because prices of some goods have gone up. But you see, inflation is inching downwards. And I would say, aside from the harvesting, also our tightening is also playing a role in it. Although in maybe a marginal quarter. And we must also give kudos to the fiscal authorities as well, because they imported food to bridge the supply gap, and more food will be coming. So what we should be refocusing on, I'll say that our tightening is going to help the economy. And you know why, Nancy? It's going to make people to refocus and look inward. The raw materials that you would ordinarily be importing, you will now start looking inwards to source for that raw material. If you know that you need to buy more dollars to import raw materials. I'll give you a quick example. A few years back, we were discussing with a farmer. He told me that Nestle, they were importing onions for Maggi cubes. Onions, the onion powder. Yeah. Onion powder is the base, is a component of Maggi cubes. And he was trying to see if some states in Nigeria could produce onions in large quantity to supply to Nestle, so that they would not have to import the onion powder from Thailand. I think Thailand was where they were importing it from. But you see, insecurity. And he discovered that the states that were largely producers of onions were from like Kebbi, Sokoto, Zamfara. And you see what is happening there now. So how do we address this? We need to tackle insecurity. Now that the federal government is doing a lot on tackling insecurity, we can see a moderation. So, but these things cannot be done in one day.
So for your department, you feel that this is achieving results?
Yes, it is.
The rate hike is achieving results?
It is. Because one, it's generating inflows for us. And once it generates inflows, Nigeria's economy is just so closely tied to this dollar. Exchange rate has its pass-through to inflation. So once we get a relative stability, which we have gotten now in the exchange rate, although the price is not what we want, but this tightening that we're doing will get us to the right price. How? By tightening, we are mopping excess liquidity from the banks, which otherwise may be used to attack the naira. Today, if we float, we've sold how many $1 million in the last 2 weeks? We've put dollars in the market. We started just to stabilize to see how it will impact on the foreign exchange, to stabilize our rates. We sold about 800 million. Phew, it went. Who are the people buying? We know, I told you, we see data that you don't see. We can see the banks that are buying. So they have excess liquidity. Let's reduce that excess liquidity. It will make the banks to perform their intermediation function more efficiently. It will make them to start coming up with products. When Soludo did recapitalization, when he said any bank that relies solely on federal government funds and cannot generate its own money shouldn't exist. You merge, mergers and acquisitions. So what we are doing predominantly now is to make banks to be able to get analysts and researchers to come up with products for them that will yield them revenue, so that they will start relying solely on government revenue.
So, of course, we're seeing a moderation in headline inflation, but I wonder what the inflation numbers will be perhaps from September and October as a result of the PMS price hike, to which the governor also mentioned yesterday. So perhaps it's not uhuru yet. You people shouldn't start dancing.
No,
yet.
We are not dancing.
That perhaps there will be higher inflation in the next few months. And like I mentioned to the governor yesterday, inflation targeted, your target for this year is 21.4%. Apparently, it's not looking like...
It's a projection. It's a projection.
But you work towards your projection.
We do not have a target yet, right? We are working towards having a target. We are conducting studies to see what will be the appropriate target for us to use. Should it be a point target? Should it be a range? And our forecast shows 21. However, we are revising as things
But you're not getting it, because your forecast for the federal government, to the federal government's budget this year, I think 21%. So CBN also went in tandem.
Different agencies would have different forecasts based on the data they are looking at. Yes. So we do not have a target yet. It's a forecast. We're working towards it, and that's why we are tightening. If we don't tighten, we will not get there. And Nancy, we have to use the tools available to us.
Do you people still have those tools to be able to,
yes, we do,
to curb the disinflation? Because what other measures is the CBN adopting to tame this inflationary measure? You've talked about, of course, there are a lot of things that are out of the CBN's hands.
Yeah.
I agree with that. The fiscal side, we should see more of that. In fact, when I interviewed the Minister of Finance, that was like during the hardship protest. I also mentioned that for me, even as someone that looks at these numbers every day, I'm not seeing sufficient coordination from his side to your side, and I implored him to do more. So are there other tools by the CBN's MPC to be able to tame inflation that is not totally I agree, monetary is there, but other factors that are also influencing inflation.
The tools that we have available to us are macroprudential tools. We're using them. And also just this injecting some dollar into the market that we did. We've done it, I think, 3 times now in the last few weeks. Is also one of the tools that we are using to address inflation. And indeed, collaboration between us and the fiscal is improving. And it's that handshake. We need you. That's why food inflation came down, actually. We need you to supply food because we're not going to do it. It's no longer part of, we're not doing it. And you can see what the fiscal authorities did. They imported maize. They've given waivers on taxes for importation of some goods, food related, and we're expecting more. If more comes in, all done by the fiscal authorities. And they have committed to not coming to us for ways and means. So there is a handshake. We are working towards further strengthening this handshake. And indeed, we hold meetings, and they've been taking some of our advice. So there is that handshake. As for the other tools we're using, we've commenced discussions. I mentioned it last time, with some DFIs, development finance institutions, such as the Bank of Industry, the Bank of Agriculture, to see how we can strengthen these institutions to enable them perform their functions very well.
Because for the DFIs, for example, their functions also largely impact the real sector, the manufacturing and all of that. Because that was my next question, even as we close this, that the continuous hike that we've seen in monetary policy rates will definitely also impact the real sector. I would assume that perhaps the Manufacturing Association of Nigeria will speak soon if they haven't spoken, or perhaps I missed what they have said. Due to increased cost of lending, like what I mentioned earlier on, increased debt burden. So what other measures is the bank taking to be able to ensure that the economy doesn't fall into a recession? And let me explain what I mean. You said that the bank is trying to tighten in order not for us to enter into the hyperinflation mode. And if inflation continues to go the way it's going like this, there's also a risk of recession. So I don't know if the Central Bank of Nigeria, your department, is also taking a look at that. Because even a GDP growth of 3% is small compared to our population growth, compared to the kind of economic activity that we should be doing. We should be posting higher single digits, if not double-digit growth, for us to be able to push a lot of people out of poverty.
I think, Nancy, you have excluded all the structural rigidities that we have in the country. Insecurity, I just mentioned to you.
Yes, you did.
It's a massive thing, and it's all over the country. It's not just in one region. Farmers cannot go to the farm. Businesses, people are afraid. So please look at the whole entire picture and remove the portion that CBN will take blame for. So that's one.
The one you are taking blame for is the one I was telling you about. No. You are hiking.
Yes, we are
I expressed myself yesterday.
Yes, and this our hike. Please also look at the inflows we have attracted. Our reserves is almost $40 billion now from where we are coming from. And there's been relative stability in the foreign exchange market. And that's what all businesses are looking for, even the SMEs and the big corporates. To enable moderate, for them to plan their businesses, they need to see a moderate stability in the FX market. And that's what we are providing. Our tightening also, the SMEs will shake a bit, but eventually they will clap their hands for CBN. And we are quite certain that our policy will impact on the real sector positively. Going forward, you asked me last time, Nancy, that will inflation decelerate? I said I do not have a crystal ball. But if I will go by the policies that the CBN has churned out and the MPC committee, that the inflation will decelerate. And it did. So I will be expecting a gift from you.
Okay.
Having said that,
let it decelerate further. Then
we are optimistic that it will decelerate further. And I'll tell you why. We are optimistic that Dangote refinery should be supported, because if they produce refined crude for consumption in the country, is going to, right now, the fact that this thing has come up has reduced our import bill on refined crude. It has reduced the import bill, so there is less pressure relative
On FX.
on FX. And if he should come on and be given full support in the country, it's going to reduce cost of transportation, which has a correlation to core inflation, you know? So, and if we can have that, and hopefully if he starts exporting to other countries, we know that he may likely, he has
He will bring in
FX
too.
denominated debts, but it will bring some level that will, we're not saying it will come, it's not going to come to our reserves, but it may reduce the pressure. But the most important thing is that in the country, there will be less demand pressure on them.
Okay. I think, Doctor, will leave it. I'll see you in November.
Yes.
Again. And
ask me the question and I'll answer you.
Okay. So I'll see you in November, and that's very soon. That will be the last meeting for the year, because the MPC is 6 times in a year, like I always say here on the show. So thank you very much, Dr. Ladi Bala Keffi, MNI, Acting Director, Monetary Policy Department of the Central Bank of Nigeria. Thank you very much for coming to the morning after.